All right, welcome to Stock Talk with Nico Criticos. Today we're going to be going through hotel stocks and we are going to be comparing them and seeing which one makes the most sense to buy. And so we're going to start off with the top 10 US cities ranked in number of hotel rooms. So first off, we have Las Vegas, we have Orlando, Chicago, Washington, D.C., New York, Los Angeles, Atlanta, Dallas, Houston, and Phoenix. Then next up, we have the states with the most amount of hotel chains. So number one is Texas. We have California, Florida, Georgia, New York, and on and on. Okay. Now we have the top 5 largest hotel chains based off of number of locations. And this is actually a little bit predated. I actually have some more recent numbers coming up, but we have Wyndham, we have Marriott, Hilton, IHG, which is Intercontinental, and then we have Hyatt. Okay. Then we have here the occupancy rate over the past 2 years, as well as the average daily rate for the rooms and the revenue per available room. So you can see back when the pandemic started in March of 2020, occupancy was very low, coming down to around 25%. Then it starts making its way up. And as of this past fall, we were at roughly 60% occupancy, which is not bad, but still not where we were before the pandemic. Okay. And our average daily rate is $128 per room or $76 of revenue per room. Okay. Now here we have Airbnb compared with all the other hotel stocks. Some of these are a little bit different because like Wynn Resorts and MGM are actually casinos and hotels, and these other ones are just hotels. But the things that are highlighted in green are which ones are best in that category, and the things that are red are the ones that are worse. So for price to sales, we have MGM with the cheapest price to sales and CHH with a 9, which is the highest. Then we have revenue expected for H, which is Hyatt, that they have the highest revenue expected for next year, 53%, and CHH is 11%. And I believe, let's see, Choice Hotels, the forward PE, Hyatt has the highest forward PE of 625, and WH, which is the Wyndham, they have the lowest forward PE. Then we have earnings growth. The ones that say a lot just mean they're coming out of negative numbers into profitable numbers, and so it doesn't correlate exact, but it just means they're turning profitable. So, or they're not going to be profitable still, but it's still a big improvement. Airbnb, I think they're expected. I'm pretty sure they're expected to still lose money next year, but the Hilton has the highest earnings growth for next year with 90% earnings growth expected. And then a lot of these other ones like Wynn Resorts, they're making huge improvements, but they're still not going to be profitable. Profit margins, as you can see, some of these like Wynn Resorts has the worst profit margins with negative 25% still. A lot of these other ones have recovered after the pandemic and they've gotten better. But I found a couple different numbers for Hyatt, but it seems like as of this past quarter, they had 30% profit margin and Choice had 24%. So those are two of the higher ones. Then for return on invested capital, we have the lowest of Intercontinental, IHG, with a negative 3%, and then Choice, once again, 21% return on capital. For the only company with positive sales growth in the past 3 years is Airbnb, which I was very surprised by this. So this means that all these companies were doing higher revenue numbers 3 years ago than they are this year. So we can see how numbers have still not caught up to pre-pandemic levels. And it seems like a lot of these hotel chains are actually deteriorating, and it's probably because Airbnb is taking a lot of business. So if we scroll down, I have some more. Actually, first I want to show you this. This is Google Trends, and you can see here how if we look up keywords Airbnb, Hyatt, Hilton, Marriott, and Wyndham, you could see that Airbnb is by far the most searched out of all these other hotels. So I found that pretty interesting. But if we scroll down here, we can see the largest hotel chain is the Wyndham with 9,300 locations, and there are more than 21,000 hotels in the United States. The top 10 cities are seeing less travel. Those are the ones we mentioned earlier, like the Chicago and the Orlando and Las Vegas, they're seeing less travel because it's spread. People are going to more different type of places. They are going to more rural areas. They're going to places that are not just big cities. And I put hotels dominate big cities, but Airbnbs dominate most of the other types of area. Now, one thing I was thinking about was that just for this year because people weren't going to cities because that's where COVID was really heavy at? Or is this going to be more of a permanent thing where people are not going to be interested in the tourist stuff as much and are more interested in seeing more outdoor things? So furthermore, we have from Airbnb's report, we have that people want more flexibility. They want to travel more, not be stuck living in the same place as their job. And they also want to take longer stays. They said they want to travel with their family more. So instead of just one or two people, it's more of, 4 to 6 people who are traveling together, big families. And rural stays were 10% of bookings in 2015, and now they're 22%. So that's one of the fastest growing segments. And national parks were some of the most popular. So how I said, I'm still not sure, is that a permanent thing, or is that just for this year because people wanted to do things outside where, COVID was less likely to be a problem? But we'll have to wait and see. I mean, compared to over the past 6 years, if the numbers have increased that much, then that probably means that a good portion of this is actually permanent. And the other thing you got to think about is, with more virtual work available, will business travel and stays at hotel get back to previous levels? So that's another thing that makes me kind of more bullish on Airbnb, is just because if people are, not only are people going to want to travel to other places besides big cities, but the people who were traveling to hotels for business trips, it's probably not going to be as popular now because they can work from home. I think it said 25% of people are expected to have a remote job in 3 or 4 years from now. So that's something to take into consideration. And then Airbnb also listed some states where their bookings are the most popular because there's such a few amount of hotels in those areas. So those states are Alaska, Delaware, Idaho, Maine, Montana, New Hampshire, Rhode Island, South Dakota, West Virginia, and Wyoming. So that's a big thing for Airbnb, is since there's such a few number of hotels in those areas, that's where they really get to take advantage of that, and they get a big number of bookings there. But yeah, that is pretty much all for today. Based off this chart, I'm most bullish on Airbnb. As you can see, the valuation is kind of high, but I really do think that they're here to stay, and I think they're a big disruptor in this industry. But if I was going to pick a hotel, I own Wynn Resorts. This is one that I do own, so I do like them because they're more of a luxury play. But as far as these other ones, I mean, I think it's important to look at the profit margin and return on invested capital. So I almost want to say this Choice one is probably one of the strongest hotel chains out there. But yeah, if I had to pick one, I'm going with Airbnb just because I think they have a bigger future ahead of them, and I think the opportunity there's so much for them to capture in the next decade. So that's the one I'm most bullish on, and I'm curious what you think. So comment down below, what do you think is going to be more of the future, Airbnb stays or hotel stays?